There is more than 40% of the Indian workforce is employed in agriculture. Nearly 46% of domestic demand comes from rural areas. The Sensex soared by about 81%. Does monsoon drive returns for the Indian stock markets? The Southwest Monsoon is more than just a seasonal event in India. It plays a critical role in sustaining agriculture, especially during the Kharif season, when crops like rice, pulses, cotton and maize are sown. This year, the Indian Meteorological Department has forecasted an early onset of the monsoon over Kerala on May 27th, 5 days ahead of the usual date of June 1st. While this is a usual or a routine update to many, it holds deep significance for millions of Indians, particularly farmers and rural communities. A timely monsoon, a strong monsoon allows for early sowing, better crop planning, and higher yields. It reduces the dependence on groundwater for irrigation and helps protect crops from late season erratic rainfall that can damage as they mature. So today we'll look at, does monsoon drive returns for the Indian stock markets? Is there a link? Is there a correlation? Does it have a wider macroeconomic impact on indicators such as inflation? And we'll look at what sectors are typically most influenced by the monsoon. So let's get into it. As we know, agriculture is one of the backbones of the Indian economy. There is more than 40% of the Indian workforce is employed in agriculture, and nearly 46% of domestic demand comes from rural areas. A good monsoon not only boosts food production, but it also revitalizes the rural demand for goods and services, housing, transportation, and creates an overall positive ripple effect in the economy. In FY23, agriculture remained one of the largest employment sectors in India, which was hiring nearly 60% of the Indian workforce. In FY24, India received 108% of the long period average rainfall, which is the highest in the last 4 years. And this year, we're predicting at about 105%. So, does monsoon and the rainfall that happens in India have an impact on the Sensex specifically? Well, stronger rainfall and a better monsoon are generally seen positively by the economy and for agriculture, rural consumption, and the broader economy. However, historical stock market data actually reveals that the relationship is more complex. In 2002, for instance, we saw a deficient monsoon. The Sensex only returned roughly around 3.5%. In 2004, we saw the rainfall was below normal, but the returns were roughly around 13.1%. In 2009, for instance, the monsoon was significantly deficient, yet the Sensex soared by about 81%. This was also around the time of the financial crisis, which could have had an impact on the returns of the market naturally. In 2011, for instance, again, we saw that there was excess rainfall by about 102% of the long period average, but the Sensex dropped by about 25% due to global and domestic economic concerns. And we can go on and on through this list. Ultimately, what we are seeing here from the Sensex data at least is that while monsoon is important specifically for sectors like agriculture, rural finance, the employment sector, it is rarely a primary driver for the overall market performance. So what happens if we look at, let's say, the Nifty 50 returns? So we did an analysis where we looked at Nifty 50 returns from 2013 to 2023. Here also we can see that there is a lack of correlation between rainfall and what is happening with the Nifty 50's return. In 2014, 2021 and 2023, all years where we saw below normal rainfall, Nifty still delivered strong returns of roughly around 10, 13% and 5% respectively. Alternatively, if we look at above normal rainfall periods such as 2013 or 2019, we see that there were negative periods where we have earned around minus 5%. Only in about 2020, when there was the COVID pandemic, did we see the strong rainfall and positive returns of around 17%. In total, there were about 8 out of the 11 years when we had below normal or deficient rainfall. We only saw 6 of them giving positive returns. And in the 2 out of the 3 above normal rainfall periods did we see negative returns. So this pattern indicates that the monsoon influence isn't really driving the market. It could be driving specific industries or sectors, but maybe there's a deeper insight we can look at it if we look at the correlation that's there potentially, because we can see some sort of negative pattern here, right? So let's look at the correlation between the Indian monsoon and the short-term market returns. One study found that the correlation between this specific instance is around minus 0.27. What that means is that it's weak. Its slightly negative correlation indicates that monsoon performance and market returns are moving somewhat independently. But why is the correlation weak? we initially had a hypothesis that maybe monsoon having an impact on agriculture, which has such a wide impact on the Indian economy and so many people are employed in it, should have some sort of an impact on the market returns. So there are 4 reasons that we can attribute this to. The first reason is that there is a declining share of agriculture input or the component in India's GDP. Earlier it used to be around 25% in the 90s and the early 2000s, and right now it's around about 18% contribution to the GDP. The second reason here is that the irrigation that we are getting, there is improvement in that. Buffer of food stocks is available. The government is more proactive with its policies, which have helped to mitigate the potential impact of a poor monsoon or a deficient monsoon as well. The third reason here is that markets have also priced in the expectations of a monsoon pretty early on. By the time the rainfall data is actually available, the attention is already shifted to other macroeconomic factors such as global trends, oil prices, elections, central bank policy, geopolitical tension, and many other such things. Finally, at a sectoral level, there are industries that are naturally more sensitive to rainfall. For instance, in drought-specific years such as 2009, 2010, we saw HUL sales fell by 13%. In contrast, 2007 to 2008, a year which had above average rainfall, its sales grew by 17%. So we've seen that historical data shows a weak and inconsistent link between rainfall and market returns. Does the monsoon, however, have an impact on macroeconomic indicators like inflation? So let's look at the food grain production that India does first. Between 2013 to 2022, when rainfall varied widely, what we are seeing is, for instance, in 2015-2016, there was a rainfall deficit. 2020-2021 showed some sort of surpluses. Despite all of this variation in monsoon, the food grain production has shown consistent growth. It has gone from about 257 million tons in 2013 to about 315 million tons in 2022. This shows that there is resilience in the system. On all of this points to improvements in irrigation infrastructure, which have ultimately led to the sector's reduction in dependence on monsoons. Ultimately, better irrigation means more food security, which means less vulnerability to monsoon fluctuations. But what about agricultural output? What is happening on that front? Well, agricultural output is more responsive to the area sown than to the rainfall levels. Small changes in the area under cultivation can actually have a massive impact or a wider impact in terms of the output that's being generated, comparable to a significant variation in rainfall. Additionally, if we start including the timing and the distribution of this rainfall, which become very important rather than the overall volume of rainfall that India is receiving, since crops ultimately need water at specific levels and growths, that is ultimately what is helping us maximize yield here. Now, the role of the agricultural in the overall economy, like we discussed earlier, has also reduced. Agriculture now contributes only 18%, like we discussed earlier, and only 1/4 of the rural economic output ultimately. This is a structural shift that is happening in India. There are other sources of rural income that are at play, which are having a wider impact on the economy's ability to be less sensitive to what is happening with the monsoon season. So while monsoons still matter, specifically for specific crops, specific regions and specific sectors or industries or companies, the broader economy is becoming more and more resilient to the unpredictable nature of monsoon and any other climate change for that matter. The impact on inflation is ultimately less direct and ultimately often delayed, influenced more by the timing and distribution of rainfall, and ultimately supported by stronger infrastructure, better policies, and improvement in agricultural output. There are 5 sectors or industries that are highly sensitive to rainfall outcomes. The first one is agriculture. This is the most obvious one, and it ultimately has the strongest relationship or the direct relationship with monsoon, since it contributes to 18% of the GDP and also employs a significant population. The sector's reliance on heavy rainfall or strong rainfall, specifically for, let's say, kharif crops like rice, cotton, pulses, soybeans, etc., is very important. There is about 55% of the net sown area in India is ultimately rain dependent, and 75% of the country's annual rainfall actually occurs during the monsoon months, which replenishes even the limited freshwater reserves that we have. So there is a very direct relationship in terms of how the sector is going to do in comparison to the rainfall or the monsoon that we're seeing. Moving beyond the fields, we see that the FMCG sector also feels the ripple effects of a good or bad monsoon through rural demand. It is closely linked to rural demand and farm output. Poor harvests or crop failures can affect the cost and availability of key raw materials. In FY24, during the poor monsoon, such as companies like ITC, Nestle, and HUL saw declines in their stock prices between June and September 2023. While diversification has helped some of these companies in the FMCG sector, others were ultimately affected by constraints of supply, poor rural demand, poor production, etc. Next, we look at the automotive sector, particularly the two-wheelers and tractors, which are ultimately very closely linked to the rural income and what happens during the monsoon. Rural income strongly influences the sales of two-wheelers and tractors, and these segments are highly dependent on agricultural performance. Mahindra and Mahindra reported a 3% decline in tractor sales from April to December of 2023 due to weak rural conditions during a period when monsoon was also quite weak. Companies like Hero Motor, TVS are expected to improve demand during the monsoon season. And a good monsoon improves the disposable income in rural households, which ultimately helps support vehicle sales and overall rural economic activity. The financial sector is the fourth sector that we will look at. Here, typically, we look at rural banking specifically. And this is an area where monsoon influences what credit is available, the repayment that the farmers or the rural economy is doing back to the banks, as a majority of that income is being driven through monsoon-driven farm incomes. And good rainfall boosts savings. It helps enable higher credit dispersals for the future coming seasons as well. In contrast, when we look at, let's say, poor seasons or poor monsoons, this can lead to loan defaults. It can lead to a reduction in the credit that's available, and it reduces the financial inclusion that is happening in that space. Finally, we'll look at the power and the renewable energy sector. Monsoon plays a very important role, specifically in hydro and wind energy, as it replenishes natural water resources and also improves the generation output. Specifically, when we look at hydroelectric power, these are dependent directly on monsoon-fed reservoirs, and hence a good monsoon does improve production of energy through renewable energy sources. It also, when we look at the wind energy output, this also tends to peak during the monsoon seasons, and ultimately, inadequate rainfall ensures steady power supply, which ensures lower reliance on fossil fuels and helps us maintain our targets. So what's the bigger picture? Well, markets react to more than just what's happening with monsoon, the rainfall, or the weather. Ultimately, it does attract attention. It matters for specific sectors, and it can impact specific outputs that we are seeing in specific industries or areas. But ultimately, the market is influenced by a broader scenario, from macroeconomic to political to global developments, and that's just the nature of the diversification that has happened in the Indian economy. There are obviously strong factors such as strong economic reforms, fiscal policies, interest rates, and all of these can have a significant impact on how the market's going to move compared to whether the rainfall has been met or not, or exceeds historical averages. And while monsoon does support the rural economy, historical data does show that monsoon doesn't in itself predict how the markets will react to it. Real market movements are ultimately dependent of a wide variety of combinations, from policy actions to economic conditions to global influences. So we hope you liked today's video. If you would like to learn more about this topic, we have a detailed blog on our website as well. Do feel free to drop a comment, like the video, and share it with your friends and family. Do let us know what other videos you want us to cover next. Thank you so much for watching. Happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.